This is the weekly review for the week of February 20th to the 24th, as well as this week's Sunday preparation. So, coming into the week, I was only looking for price to potentially trade up into this low resistance liquidity run. So, I was looking for a potential long setup to form. Um, but that didn't happen at all. We actually remained very heavy, with Monday being a bank holiday, so we just had consolidation, and then Tuesday gave the displacement down, which gave the directional bias for the week. Um, so this fair value gap up here never got filled in. So on Monday's trading, because it was a bank holiday, I was just expecting consolidation, and I was looking how price was going to be trading around the new week opening gap, because that's what ICT has been talking about. When we're in consolidation, price is going to be gravitating around the new week opening gap. And when I got on the charts, I saw this SMT with the Asian low and how we traded up into this low resistance liquidity run here. But it was only a very shallow raid. So I kind of viewed these as equal lows. And I was seeing if potentially in the AM session we could come back and take them and form a long setup for a little scalp. Um, Now, what ended up transpiring is we had a bearish SMT with the London, the London high, and then this short-term SMT here. And on the hourly chart, the candle closes were respecting that new week opening gap here, and then we had displacement lower, and we formed a short setup that I noted. This one was, I noted this when I was just reviewing the charts at the end of the day, how we came back up into this fair value gap and traded down to the equal lows, and I just based take profit off of this order block and low resistance liquidity run here. So that was a 1.3 hour trade. Now the one that I was looking at live was this one right here, where we took those equal lows, we had another SMT and had this displacement up here, and I marked out premium and discount, and this is the M5 breaker, and then I just noted a fair value gap here. This was a M1, M2 fair value gap, but I put my limit at the top of the breaker, and you see it just got swerved here, and I was basically targeting the mean threshold of this M15 fair value gap. That was what I felt the low-hanging fruit was, but I got swerved. We traded up into that, and then I just pulled my limits because I didn't know if price was going to RTO here and then go lower, and that's exactly what ended up happening. So that's why, because I didn't get filled in on this retracement here, I just decided to pull the trade. So that was Monday's trading. Then Tuesday came, and ICT told us that on Tuesday, because we had a bank holiday on Monday, anytime that we have like a abbreviated trading session, the day after it is going to be sloppy price action, and that's really what ended up happening. Tuesday was good because it gave us the displacement down that violated this daily order block here, which gave us the directional bias on the week, but there were really no entries, clean entries that I saw. So price remained, or what I noted in my journal was that price remained very heavy from the 12 a.m. opening price. We only had a very small Judas swing, immediately traded down, came back up, respected this H1 fair value gap, and then was just kind of chopping lower prior to 9:30. And prior to 9:30, I didn't really know what price wanted to do. I was leaning bearish, but I was just watching price, and this didn't look anything like a market maker buy model, so I didn't think that price was gonna trade up into here or up higher and take out these relative equal highs that I noted. Um, so what ended up happening is we had a very brief Judas swing, which or shallow Judas swing, which is in line with price remaining heavy from the 12 a.m. open. We're not going to price is so bearish, we're not going to be able to rally very high to take significant buy side. So we just took this short-term sell side and had a little setup here with this M5 breaker and also M1 breaker. It was a little bit clearer on the M1. So this one right here broke market structure and came back up into premium at the breaker and then sold off and respected these fair value gaps on the way down. But really it was only in the AM session that I found those PD arrays being respected. Anything after that down here, I didn't see anything. But at the end of Tuesday's trading, I had confirmation that my weekly bias was going to be bearish because now we broke market structure here. This was a daily swing low. And then we also had that daily order block, as I said, was violated. Then after Tuesday, on Wednesday's trading, I was expecting consolidation, one from this large range that happened yesterday, but also because when I got on the charts at 8 a.m., I saw that price was stuck in between two raids. We took London high here, and we had taken previous day's low here. So in here at 8 a.m., we were stuck in between two raids. And I was noting this setup here. This was an M15 breaker. And don't have the visibility for that on. So that was the M15 breaker. And I was leaning short-term bullish because we had this low resistance liquidity run up in here from yesterday's huge sell-off. So I was thinking that price could reach up into there. So even though we were in between these two raids, buy side and sell side here, I was favoring the long setup, but because we were in between two raids, I just decided not to do anything. And that was the right move because price ended up just going into a seek and destroy profile where we just went from here, took sell side, no RTO, took buy side, no RTO, took sell side. And we're just like cutting through all of these PD arrays. So that's why I didn't end up setting limits for this trade. And what I noted after Wednesday's session, because Wednesday I really wasn't on the charts too much. I was just on my phone and I was very busy at work, so I couldn't really watch this live. But I did note this setup here, that after we had this 3 drives pattern, or even 4 drives you could say, taking sell side, sell side, sell side, broke market structure up. We have yet, obviously here prior to the RTO, we have yet to take any buy side liquidity. So I noted in my journal that I felt that this was a favorable setup to take. We didn't obviously get down into discount. We did hit the mean threshold of the breaker though, and came into this fair value gap and ended up trading to take out the buy side. So I think that this was a pretty clean setup. ICT noted this kind of setup prior in his live stream sessions, where if price is like repeatedly taking one side of the marketplace, and I think that's where the 3 drives pattern originates from, where we're just taking sell side, sell side, sell side, or obviously buy side, buy side, buy side. Price is then obviously going to have a higher likelihood to reverse and take the liquidity that has not yet been taken, which obviously in this case was this buy side liquidity here, and you could say, relative equal highs. So I did like this setup. Um, then we had this FOMC news in the PM session, and what I noted in my journal was that because we're still in a seek and destroy profile, um, we have this M15 breaker here, but because we're in a seek and destroy profile, we shouldn't anticipate price to RTO the breaker and go higher. We should anticipate the opposing sell side liquidity to be taken. So we took buy side here. It's more likely to come down and take sell side AM lows than it is to RTO this and go higher, given that we were in seek and destroy profile the whole day. And that's why I felt that, and ICT also annotated this live. I think he took a trade um, in here on this M1 fair value gaps. We had SMT rated AM high and then broke market structure, RTO to the fair value gap, fair value gap, fair value gap, respecting bearish PD arrays all the way down until taking AM session low. So I think the logic on Wednesday was pretty clear. And that's really what I'm mostly focused on, is just the logic for the entries. Like, why are we skipping this entry and skipping this entry here, right? That's the most important thing that I'm trying to focus on when I annotate in my journal. Then on Thursday's trading, on Thursday we formed a daily fair value gap. This blue box right here. So I was anticipating price to trade up into that, which is why initially prior to, should go on the M5, prior to 8:30 trading, my forecast for the day was that price was going to come down and take there it is. It was going to come down and take London low into this fair value gap, and then come up and take these relative equal highs, London high and previous day's high. I felt that they engineered this liquidity, and this move was going to transpire, and I was going to get a long setup formed here off of a low, a rate of London low. That didn't end up happening. We just took short-term sell side, these relative equal lows, and had a failure swing SMT with London low, and that gave us a bullish setup, which I was just tape reading for. Man, it's a little bit messy here. Move that. So this, I was watching, because on M15 the breaker didn't look super nice. That was the breaker that I noted. This one right here. Because it had such a long wick, I was watching the consequent encroachment of that wick right there. And there was also a fair value gap coupled with that breaker. This orange box here, and then this one right here is a breaker. So I was watching to see if at 9:30 opening we respected that and would trade higher up into the daily fair value gap. And that did end up playing out. And on M5, we see how the bodies of the candles were respecting that consequent encroachment of the breaker. So this was a really nice trade. Then I was monitoring this potential compound entry with this fair value gap here and this order block here. And I was seeing if price wanted to trade down into it and go higher. Personally, I don't like taking those trades. I like taking the first trade off of the raid because I never know if these are going to work out or not. And I feel like this didn't work out because obviously we had that SMT and we were above buy side liquidity. And the weekly bias is bearish given that displacement on Tuesday. I just personally wanted to see price dig up deeper into the daily fair value gap, but I guess that's me trying to force what I want on price because price printed this bearish PA, right? SMT and we're above buy side liquidity here. So that's probably why these PD arrays weren't respected, and that ended up giving us a bearish setup here. So let's clean this off the chart so it's easier to see. We had that M5 breaker here. See what. Okay, so initially from that range high to that range low, ICT marked out there was like that 10:06 a.m. 1 minute fair value gap, which is basically this. And I was watching for price to come up into premium here, right? That's where I didn't set any limits. This was just tape reading, but I set like I mapped this all out live, and I was watching this live to see if it would play out. We never came back up into premium. We just hit that fair value gap here, mean threshold of the breaker. So yeah, don't know why this still didn't come up into premium, but we respected that. And what I noted here was that with this second fib is that initially we made that range low, came up, traded down, made this range low, and if now we take the new range, it did end up trading into premium. So that was a little bit confusing. So I just noted both of those ranges from that high to that low and that high to that low in my journal because it made a new dealing range and came back up into premium of the new dealing range. So it played out nicely. The logic here was fine. Just the entry for me was off. And we ended up trading down into the low resistance liquidity run up in here and up in here and taking previous day's low. So Thursday was very nice entries. Same with Wednesday. Then Friday was a bit of a sloppy day. We had ICT noted this USD or dollar index SMT inside this hourly order block. Couldn't see anything in here or here. Basically nothing until 9:30 where we took previous day's low and this daily low here. This one right here came down into this fair value gap and into this order block. This US 500 chart didn't hit the order block, but the ES chart or the futures chart did hit the order block. And I was just watching this bearish setup here. I wasn't super confident on this since the stop was so large. But the reason I feel like this ended up playing out was because, right, 9:30 we took short-term buy side displacement down. I think it was because we just had such a shallow raid of this daily low here with these candles that price respected these low time frame bearish PD arrays and ended up digging down deeper into the liquidity below this low. And then that ended up forming the low of the day with a SMT with NASDAQ. Came back up and took buy side, had another SMT, and I was watching for more bearishness, but we didn't have any clear displacement down here. Right, had this breaker here. I actually didn't note that, but then we ended up respecting this M5 fair value gap, had a break in market structure, rallied, came down into this inefficiency here, and ended up rallying again, violating this order, this breaker. And the trade that I mapped out live was this M4 order block here, coupled with this fair value gap. So because we respected or were respecting these bullish PD arrays and violating these bearish PD arrays. And it's a Friday, and we made the low of the week here. I was anticipating the low-hanging fruit, this buy side, short-term buy side, was going to be taken. And that's what ended up happening beautifully. We came back down, hit that M4 order block, and immediately respecting this fair value gap here, the closures, and boom, we went up, took the the buy side here. So I really like this trade here. Then I ended up mapping out this M5 breaker, where we took these relative equal lows sell side here. And this one didn't end up playing out, and I think the reason for that was because time of day was already 3 p.m. here, and this is just premium discount of that dealing range of the breakers and discount. I think this breaker didn't end up playing out because we already came up into the mean threshold of this fair value gap here. We took this buy side, and ICT says that the last hour macro is going to run on liquidity that has yet to be taken, and we've already taken buy side, and the only liquidity left is this sell side here. That's near price. So I think that confluence of reasons is why this this breaker didn't end up playing out. I don't think there was an entry though for a short. No, I don't see anything. So yeah, we just immediately came down and ran that sell side here. So it wasn't a bad week. At least we have a direction. Coming into next week, going to still remain bearish. I just like marked out the PD arrays here. ICT didn't give us anything on that live stream yesterday, but for like levels on ES, but I put the consequent encroachment of this weekly order block, mean threshold of the order block, this consequent encroachment, and then this market maker sell model low or original consolidation, and that's on the daily chart. I think that this is going to be a market maker sell model here. So this low here, 37.88, is going to be the drawn liquidity for this week or for the next couple weeks until we make it down there. But the bearish picture here, I think, is clear with these equal highs rated SMT, and then breaking market structure down here. As for the news, we still have a pretty good week with medium impact and high impact news. No crazy high impact news like NFP or anything like that. So, and no bank holidays. So I think that we got Monday through Friday. So every day of the week is going to be pretty tradable. And then the note that I had here was because we hit this daily order block, I'm potentially thinking we could come up and take this swing high here, this daily swing high, and maybe dig back up into this this breaker here and a little bit deeper into the fair value gap. I think that would be a nice trade like that. That's what I'm going to be watching. Don't know if that's going to play out though. So basically Thursday's high. We do have relative equal highs, I believe, with some of the other indices. Dow does these relative equal highs here. So that's what I'm going to be watching. I don't see anything else clear here that we would trade up into. Maybe we just end up gapping lower and then coming back up into the gap and continuing down. So we'll see what Sunday's opening does. But ideally, I would like to see this buy side taken and we form a high of the week here Tuesday and a bearish setup to take us lower. That's what I want to see, but we'll see what price ends up giving us. And then as ICT was saying that in the live stream yesterday, still focusing on these relative equal highs here to be taken. So I think the bias going into this week is pretty clear. So yeah, we'll see what ends up playing out.